you know, you know this guy as well. We called him Thor. And I grew up with this guy. He made a killing in crypto. And you know, growing up alongside him, seeing him being much earlier on this thesis than me, um, obviously made me think. And back in 2020, when I finally capitulated and accepted that it was a transparent coordination between the Treasury and the Federal Reserve, and the treasuries and the central banks globally, uh, I think that was kind of where I capitulated and said, okay, this is what's going to happen from here because it's not even hidden anymore. Um, and and therefore, it took me too long, I'd say, to recognize that it was here to stay. And the Silicon Valley Bank case was the final nail in the coffin. I remember you and I doing an emergency live, probably on the week after the Silicon Valley case, and you basically just leaned back and said they're going to, just going to backstop this. And having worked in banks and cooperated with bank treasuries, I was scared of that because it was the first thing I saw when I entered the trading desk. It was Lehman, and it wasn't backstopped, right? And
right.
This felt Lehman-like when immediately when I saw I kind of got that PTSD from the Lehman crisis, and I told people that this is Lehman-like if they don't do anything. But they backstopped it, and they backstopped it immediately, and the defining moment for me was this. I think I can't remember his name, but a senator from Oklahoma asked Janet Yellen in Congress, maybe the week after Silicon Valley Bank, okay, if this was one of the community banks in Oklahoma, would you backstop that bank as well? Would you backstop my voters' deposits in such case? And she didn't give a clear answer. And that led to this whole deposit flight from regional banks into larger banks. Ultimately, the Federal Reserve and the Treasury Secretary basically more or less publicly stated, okay, we're also going to backstop the regional banks as a consequence. So the system is now backstopped officially. That was where I caved in. Finally.
Exciting news has hit the stock market, causing ripples of speculation and opportunity among investors. The recent tariff relief granted by Donald Trump to key tech companies has sparked a surge in Bitcoin's value, breaking through resistances and creating a bullish scenario. Dive into this captivating narrative featuring leading companies and figures such as Bitcoin, Donald Trump, and more. Welcome back to Investocracy Crypto.
How do they get out of this mess of just because they're going to have to debase currency a lot to pay for all these instruments? What's your kind of framework of where we are and how this is going to solve itself in this cycle, not in the long term? We'll talk about the long term in a bit.
Yeah. So, we're approaching a massive refinancing cycle right now. And that's something you need to consider when you assess central bank balance sheets, bond yields, and the impact across assets, because we're not going to make it through the next 24, 48 months without lower bond yields. I essentially rule that out. And if we get a market that is not willing to play ball, the central bank will essentially have to solve it. So how do we get to a point where the central bank needs to step in? I think they're kind of engineering that scenario right now in front of us. We basically need a market that is sufficiently weak for the Federal Reserve to be able to use the excuse that financial stability is threatened. Because with inflation running a little bit above target still, even though I think it's declining here, and with a debt load that is as fierce as it is, they'll have to be able to use this financial stability excuse to come up with some sort of way of solving this.
So you're suggesting we have to break something?
Yeah. At least I think it's a valid thesis here, because otherwise I think they would have stopped a few weeks ago. That's point number one. Point number two is that if the central bank is a little bit scared of restarting QE for a list of reasons, whether they're political or whether they're related to the inflation pressure, they could find alternative ways of asking the private system to buy the bonds for them. I've floated the idea that
This is why I've been using total global liquidity as almost a better measure, because they're using the private sector.
Yes, and that's a new thing, because a couple of years back during the pandemic it wasn't needed, but it's needed now. So they have a couple of options here. One of them is to basically, via regulation, force banks to hold more U.S. Treasuries in their liquid assets. And if a bank is forced to do so, it happens, right? They cannot do anything about it if they're forced to do so via legislation. And I think that's a very simple way of solving this. So I've talked to a lot of guys telling me that the Fed is cornered here because inflation is too high for them to restart these bond backing schemes. And well, my response to that is basically, well, then they'll force someone else to fix it. And they could easily do that, even if, let's assume that the Federal Reserve will kind of turn a little bit political here against everything that Trump is doing. Let's just assume that. The Trump administration could itself impose these rules on banks, right, via all sorts of tricks they have up their sleeve. So I don't think that will, avoid some sort of situation where the private sector will have to accept being used as a funding vehicle here. And there are many ways of solving this.
The other way is
the Trump administration could do it itself, right?
In the realm of stock market tales, a twist of fate emerged as Bitcoin, after a 3-month downtrend, leaped beyond the $84,000 resistance. Some credit this surge to a bullish divergence pattern, while others point to Trump's tariff relief for tech products.
We kind of know what the conclusion is ultimately of all of this, given that the corporation is not hidden anymore, and they're incentivized to do the same thing.
So what does that mean for asset prices in the market on a longer term basis, and where we are in the cycle? I mean, because now we've got these super players that have taken the left tail risk off and debasing currency. What does that mean for investors, and what does it mean for people? So people watching this, I don't quite know what you're talking about. What does it mean to you?
So first of all, Raoul, if we look at the central bank balance sheet in the context of everything that's ongoing with tariffs, NATO, the negotiations with China, etc. Let's just address a question that I get a lot around that, because we obviously know that China, Japan, etc., they hold a lot of US treasuries. And it's a theme that is always brought up when we get these geopolitical tensions back and forth between the countries. So assuming
yesterday the bond market moves one day and everyone goes, China's dumping treasuries. I mean, all the time.
Yes, I don't buy that, by the way, but let's just assume that China sells US treasuries and Japan will decide to do the same as a consequence of what's ongoing on tariffs. I don't buy it, but let's just assume that. I think the worst, quote unquote, worst case scenario would be that the Federal Reserve will have to step in with some sort of light yield curve control in such an environment, which ultimately leads to the same conclusion, that the currency will be debased because they'll have to print dollars to avoid escalating tensions in bond space. So the layman terms conclusion of all of this is that the dollar that you hold at a bank deposit will be worth less over time as a consequence of the central bank bailing out the bond market. And I don't hold high hopes on behalf of the Doge project. I think it's almost impossible to bring the deficit down. Ideologically, I think it's a good idea to give it a shot.
Some of the increase that's coming from the interest payments, but it's just slowing down the rate. It's not reducing it.
Yeah. And, as we speak, it also kind of feels like Elon has, thrown in the towel on that job to some extent, even though, you'll have to praise him for his efforts, but it's an impossible task to really change the trajectory of the deficit, in my opinion. So the point here is that we'll have to do something to avoid a scenario where interest rate payments just grow and grow and grow and grow as a part of the budget.
Within the buzz lies a focus on Trump's exemptions, a strategic move influencing not only the market but also blockchain innovation. As Bitcoin eyes the $96,000 resistance, speculations run high about a potential reclamation of its all-time high. The narrative swirls, urging investors to keep a watchful eye on emerging opportunities. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
This is Tuesday, 8th of April. You think the low is in markets?
I've said yes to that question once over the past week already, which proved to be wrong. So my best guess right now, and I actually said that in my last State of the Union, is that in between the 15th and the 30th of April, we'll get the low. So we'll have to
1 month time. Yeah. Prices are higher.
Yeah, and the reason why I say so is that we actually still have that capital gains tax season upcoming because of returns from last year, and that's between now and the end of the month. We typically get some vol around that, and then we obviously don't know whether it will escalate a little bit between China and the US. But if you look at financial conditions, and especially the way that the dollar impacts, for example, Bitcoin, May is the final chance to get involved on the long side again, in my opinion.
Yeah, I'm the same. I think it's bottomed, but we'll see. But it's in this window. It's in this very short window between now and 2 weeks. It's the last chance saloon, I think. And I think you've been given a gift in a lot of this stuff, because if we're both right that liquidity will accelerate, the forward-looking stuff is already lots of liquidity coming, or will affect asset classes. But if it keeps going, then we got to, this was the last big dip to get. To leverage into.
As the narrative winds down, the spotlight remains on Bitcoin's trajectory above $85,000. While the terrain may seem uncertain, the call to explore new horizons persists. Venture into the realm of crypto ICOs, where untapped potential and short-term gains await the daring. These projects, rich in utility and promise, may hold the key to future investment success. Embrace the evolving landscape, discover the gems hidden in the digital depths, and seize the moment to sculpt your investment destiny. And finally, if you would like to know more about cryptocurrencies, or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.